For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Dan Niles, the renowned founder of Niles Investment Management, recently shared his perspective on CNBC regarding the potential challenges facing major players in the artificial intelligence sector. According to Niles, a decline in overall spending could emerge as a significant obstacle for these companies as we move into 2025. He provided an example from a recent discussion involving Satya Nadella, the leader of the well-known software firm based in Redmond, who revealed that the company's primary constraint is not a shortage of chips, but rather a shortage of power. This remark stands in stark contrast to statements made by Jensen Huang, who has frequently emphasized the extraordinary demand for artificial intelligence chips. The conflicting viewpoints highlight the complexities and challenges surrounding the artificial intelligence sector as it continues to evolve. Niles also delved into valuations, discussing the market dynamics of leading stocks versus smaller and mid-tier companies. He explained that the companies commonly referred to as the Magnificent Seven are currently trading at price-to-earnings ratios in the low 30s. In comparison, the S&P 500 index has a price-to-earnings ratio of 25, while mid-cap and small-cap stocks, which often receive less attention due to their limited association with artificial intelligence, are valued at approximately 19 to 28 times earnings. Niles pointed out that these smaller stocks have underperformed for much of the year. However, their performance began to improve mid-year, showing a more optimistic trend. When analyzing stock performance since the end of June, Niles noted that the S&P 500 has risen by about 8%, whereas the Nasdaq 100 has increased by 7%. Interestingly, the Russell 2000 index has performed even better, climbing by 10% after recording only a 1% gain during the year's first 6 months. This broadening of market performance suggests a shift in investor interest, potentially driven by policy changes under the current administration. Niles emphasized that the administration's focus on promoting domestic manufacturing and deregulation could particularly benefit mid-cap and small-cap stocks, positioning them for further growth compared to the larger companies in the S&P 500. Looking ahead, Niles expressed concerns about the stock market's outlook for the first quarter. He warned that stocks could face a challenging period as the Federal Reserve adjusts its approach to inflation and monetary policy. According to Niles, the Federal Reserve has now acknowledged that inflation is not a temporary phenomenon, a realization that could have far-reaching implications for the markets. He predicted that the first quarter might be particularly difficult for large-cap stocks and the broader market as investors adjust their expectations. Niles speculated that the Federal Reserve's actions in the coming year remain uncertain, with an equal chance of pausing, raising, or even cutting interest rates. This unpredictability could add volatility to the markets, particularly for companies with high valuations. Adding to the discussion, James E. Demert from Main Street Research offered his analysis of Palantir Technologies and Nvidia during a recent program on the Schwab Network. Demert highlighted Palantir's exceptional stock performance, noting that it has surpassed Nvidia and could also outpace Nvidia's growth by 2025. He explained that while Nvidia has benefited from immense demand for its products, much of its growth has been tied to hyperscalers, a trend that may be slowing. In contrast, Palantir's growth trajectory appears to be accelerating, supported by its innovative technologies and strategic positioning in the artificial intelligence market. Demert's comments underscore the growing recognition of Palantir as a formidable player in the artificial intelligence sector. The company's advanced technology, ontology, has been instrumental in solving the well-known hallucination problem associated with artificial intelligence systems. This breakthrough is a result of Palantir's extensive experience working with military and defense systems, which has provided the company with a unique edge in developing reliable and effective artificial intelligence solutions. Earlier this year, during a customer-focused event, Palantir shared specific examples of how its artificial intelligence platform, launched approximately a year ago, has helped its clients achieve significant cost savings and operational efficiencies. For instance, Airbus successfully increased 350 aircraft production by 33%, while BP managed to lower its costs per barrel by 60%. Similarly, Jacobs Connect reduced power consumption by 30%, and Panasonic achieved a 12% reduction in waste. Other examples include ESI Group, which expedited enterprise resource planning harmonization by 70%, and Tyson Foods realized cost savings of $200 million. These achievements demonstrate the tangible benefits of Palantir's artificial intelligence platform and its ability to deliver measurable results for its clients. Despite these successes, analysts have projected a slowdown in Palantir's revenue growth over the next 2 years. Estimates indicate a 22% year-over-year growth rate, potentially bringing the company's revenue to approximately $4 billion by 2026. However, if Palantir can improve its operating margins by 100 basis points each year, it could generate around $1.5 billion in adjusted operating income by the same year. When discounted at an 8% rate, this income would have a present value of $1.3 billion. The Fidelity Growth Strategies Fund also weighed in on Palantir in its third quarter 2024 investor letter. The fund noted that its performance was adversely affected by untimely investments in Palantir, which saw a 47% increase during the period. The letter highlighted that Palantir's growth was largely driven by its artificial intelligence platform, which has gained traction among clients. Fidelity disclosed that it established a significant position in Palantir during the quarter, making it the fund's second largest holding by the end of the reporting period. In summary, while challenges such as slowing revenue growth and market volatility may lie ahead, Palantir Technologies continues to position itself as a leader in the artificial intelligence sector, delivering innovative solutions and measurable value to its clients. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.